Hello everyone, this is Abhijit Chatterjee recording our weekly session of Chartsarefun. This is for the week of February 10th. I'm recording this on Sunday, February 16th. First of all, appreciate you subscribing to our Chartsarefun Substack blog. This is a daily blog. You just can send your email and subscribe to it. Every day when we publish these blogs, you'll get an email of that blog. And then we have our weekly YouTube videos like the one we're doing today. We appreciate you subscribing to the channel, also called Charts Are Fun. And if you like the videos, we appreciate you hitting the like button. This just encourages what we do, and hopefully you'll find these things valuable, these insights. Today, the agenda is three key things. I want to talk about Bitcoin because we know that Michael Saylor, the founder of Microstrategy, has been a huge perma-bull in Bitcoin. We know that he changed the name of his company from Microstrategy to Strategy. He believes that there is going to be tremendous amount of strategic directions from various large company treasuries focusing from their balance sheet from straight holding treasuries to looking at more of the benefits of holding Bitcoin. So he sees that as a long-term investment play. He's made some very bold forecasts. So we'll look at his predictions and we look at what the long-term chart of Bitcoin is telling us. In particular, we'll look at the monthly chart of Bitcoin over the last few years, last 10 years or so. Then we will look at a key market breadth indicator called the New York Stock Exchange Summation Index. It's based on the McClellan oscillator, which really measures market breadth in terms of advancers minus decliners, the net advancers, you could call it, in the New York Stock Exchange. All the stocks that are in that stock exchange, we'll look at that. And it's a cumulative index, which means as the breadth keeps improving, it cycles from anywhere from minus 1100 to up to 1100. It doesn't always get there. When it's very overbought, it may get there when the market's breadth is extremely good, but sometimes it may just top out somewhere in 600 to 800 and then pull back, but it keeps cycling. So it's a cyclical indicator giving us some indicators about market's direction. So we'll look at the near-term chart of that, and we'll look at the weekly chart of that. So near-term is the daily chart to a weekly chart of the NYSI summation index to kind of get an indication of where we think the S&P 500 could be headed. And then I'm going to end it with Magnificent Seven. There's a key ETF that's available from Round Hill called MAGS. MAGS for Magnificent Seven. We know that 6 of the Magnificent Seven had their earnings in the last few weeks. And the market has been talking about this has become from Magnificent Seven to a Magnificent One. So there's been some bifurcation of these stocks in the Magnificent Seven. Not every stock is moving up in tandem. It's been more of selective move. In particular, Meta has done the best after earnings. It has really kept moving up to higher highs. But others, whether you're talking about Apple, whether you're talking about Microsoft, those are the huge, the top 2 market cap stocks. NVDA had pulled back a lot after the DeepSeek scare, has come back a little bit towards the 130s. NVIDIA's earnings is the only one that's left to come from the Magnificent Seven. They typically come out last week of February. Right now, they are coming out on February 26th. So we'll see what that could be due to the market. But we feel that the Magnificent Seven ETF MAGS is giving us some signals. So we'd like to share that and end today's analysis with that. So coming back to the top of the agenda, which is MicroStrategy, which has now been named Strategy. What has Michael Saylor, their founder and CEO, been doing? Well, he has been constantly adding to his position in Bitcoin. They have about 480,000. I'm kind of rounding it up. It's somewhere 478,000. So 480,000 Bitcoins in their balance sheet. Take a rough price of 100,000 per Bitcoin. That's 48 billion of money in their balance sheet invested in Bitcoin. He's a heavy believer of that. He believes in leverage. He's kind of playing out an instrument, an ETF for twice X leverage on Bitcoin, playing primarily on the volatility. He believes Bitcoin on average would go like recently has been doing 60% annual gains, though he has put a long-term target of going up at 29% over the next 21 years. That's his long-term forecast of how the Bitcoin price will move. And he believes that the typical leverage of basically taking out a treasury loan and investing that money into Bitcoin you will see a significant difference of volatility. A treasury may be anywhere annual gain of maybe 5% versus you're talking about 60% of a Bitcoin. So that's like almost 90% benefit in terms of vol. And he believes that that kind of gives him that 2x leverage in investing in the volatility differences. So he's been kind of created an instrument to play that, and he believes that he can return such astronomical gains to his shareholders. Now, his play after renaming his company from Microstrategy to Strategy, and he renamed it, is said there's nothing micro about their strategy. They are a strategic player of Bitcoin. They believe that not just him, other companies from the Fortune 500 will be investing more of their balance sheet into Bitcoin. We know that GameStop CEO Ryan Cohen has been in the Twitter tweeting a picture of him and Michael Saylor together. He's got over 4 billion of cash in his balance sheet. Might likely be playing the next. It's not been announced yet, but maybe in the next earnings he'll announce it. He might be beginning to move his cash position, his treasury, and make it a Bitcoin play as well, following a classic out of the book from Michael Saylor's strategic direction. So there's one company, GameStop, that might be in the coattails of MicroStrategy. Others have kind of thought about it, talked about it, but no one's made the bold move that Michael Saylor has done. Now, what did Michael Saylor do recently after renaming his company from MicroStrategy to Strategy? This is the news article that's talking about it. He added to his position, he added 7,633 coins just in the span of the first week of February. This from the 7,000 adds to a total of 32,000 he's added so far just in the year of 2025. In the last 6 weeks 6 weeks of this year, 2025, he's added 32,000 coins out of a total of 480,000 coins. So he's aggressive about Bitcoin. He believes that that's where it's headed. And there's been valuations that he's thrown at where he believes from a short term, it could go anywhere from 200,000 to 500,000, but in the span of the next 15 plus years, he could see Bitcoin grow to 5 million. He's even made aggressive saying that, look, in the last 6 months, Bitcoin has climbed close to 60%. And if it continues to grow at that rate of 60% every 6 months, it could get there in 3.5 years, the 5 million target. But that's been unrealistic. But if he really follows his long-term forecast, which is he's saying that Bitcoin could climb at 29% compounded annual rate of growth over the next 21 years. Let's just put in a simple calculator, a CAGR calculator. If 100,000 Bitcoin price currently going up to 5 million in 15 years, we see that's around the 29% that he's expecting. So that's his expectation that by 2040, 15 years from now, Bitcoin could be at 5 million, and that could basically come from a 29% compounded annual growth. Now, I want to talk about the chart of Bitcoin. We here love charts and we believe to follow tea leaves from the charts. So this is a monthly chart of Bitcoin. Every candle that you see here is a month of trading. And what we see here is 3 halving periods over which Bitcoin has performed outstanding after the halving. One was around the 2016 halving. And from there, we can see that it was a nice upside move, a very parabolic kind of move post halving in 2016. And from 776, it climbed to close to 20,000. That's a close to 25x growth or gain in Bitcoin. Then we had the next halving period where from around 13,000, it went to 69,000. 13,800 was the previous peak. So say 14,000. That's a 5x. So 25x in the first halving period, a 5x gain in the next halving period. And now we are just about climbing the recent halving that happened last year, April. And so far we've broken out of the 73.8 or 74. What does the chart tell us? This shows us a beautiful cup and handle. 69K is the left brim of the cup. 15.5 was the low in the this particular cup, came up to 73.8. So 15.5 to 73.8. Right there, you're talking about 58.3K. At 58.3 thousand to 73.8K or 73,800 gives us a target of 32,100. That's just the math of how we get the 32,000 target, 132,000 target of Bitcoin. So 15.5 to 73.8 is 58.3. Add 58.3 to 73.8, 132.1, which is 132,100 is where we think Bitcoin is going to climb. We think it could pull back and retest that key support level of 73. Anything is possible. But if we look at currently how the chart is shaping up, it has broken higher. Since the breakout higher, it has been trading in a range of 109,000 was the peak that we saw couple of months back around November, and at the low end at about 89,000. In a $20,000 range, it's been trading. It's just poised for a breakout. And I'll explain why we think the breakout is coming in the next couple of weeks, because we believe that S&P 500 will have a cup and handle breakout. And with that, the riskier assets will all start climbing. And we believe that over the month of March to April, we might see that 132,000 quite likely as this breakout happens. That's the expected move. One thing I do want to highlight is look at the first post-halving, from the chart here, from the 2016 move, this thing here moved 25x, and that's why RSI was that much stronger, because look at the parabolic nature of the move and how it shot up. It's such a short period, that kind of 25x multiplier from a logarithmic move. Hence, the RSI was that much stronger. Next time, it from 25x went to 5x, and hence from an algorithmic, logarithmic part of the climb to where the RSI was, not as strong as this one, but RSI went up pretty strong. This time we are seeing that the RSI, because it's again law of large numbers, to grow from a bigger base is much harder than grow from a smaller base. From a smaller base in the $700 to 19,000, 25x kind of moves are expected. Next time from 14,000 to 70,000, a 5x move is expected. Now we are expecting something off from a 69, 70,000 to 132, little less than 2x, but that's where we think this near-term move is. And we got to see once it gets there what the basing pattern tells us. But if you talk about an Elliott wave kind of move, this is a classic 5-wave move. So from that 157 low that we see in 2015, this is wave 1 to 19,000, wave 2 pullback from there to 3,000, then the wave 3 climb. So there are 3 kind of nice climbs. Wave 1 from 157 to 19,000, then the wave 2 pullback to 3,000, wave 3 climb from there to 69,000. Then we got the wave 4 pullback from 69 to 50.5, and now we're getting the wave 5 climb. And the wave 5 climb in this case, we're measuring something around from this cup and handle target around 132,000. So that's where we think Bitcoin could be headed. So it could be a good time to place the Bitcoin ETFs, whether it's the FPTC, the Fidelity's Bitcoin, IBIT, or you're looking at the very well-known Grayscale Bitcoin GBTC. And then there are levered plays. You could also play it through MicroStrategy, the MSTR as the way to play it. You could use the leveraged ones like BITX. That's a twice X leveraged fund on Bitcoin. So for those who are very aggressive, could play those. And then you have the miners in Bitcoin, whether it's Mara, Riot, and so on, could be the ways to play this Bitcoin upside coming. Now, I said I'm going to talk about a key market breadth indicator called summation index. And the reason charts are fun is it's all about patterns. And there's a beautiful pattern shaping up in the daily chart of the New York Stock Exchange summation index. And what I'm highlighting here with the blue ellipses is every time, and this summation index climbing means the market breadth is climbing. And a key indicator or a key pattern is when the market breadth climbs, the market overall climbs higher highs. That's just a pattern. And then when the market breadth kind of deteriorates, overall, the broader market, not the S&P 500, which is primarily moved by these magnificent 7 stocks, but the overall market, as the breadth keeps coming down, the overall market has a downward move, which we know from a small cap. IWM is far away from its November high to where it has been recently. So that kind of indicates the market kind of posting lower, and now we are about to climb higher, and we've climbed for the last 1 month from middle of January to about now. We see that the summation index is climbing. However, at the very short term, the key indicator that we follow here is the MACD, which is the moving average convergence divergence. This is the moving average of not of the index, but the moving average of the summation index, not of the stock index, but the summation index. So that moving average, when you look at the histogram, which is the, the bell-shaped histogram here, you can see that every time the bell-shaped histogram crosses below the center line or the zero line, you start seeing on the lowermost panel volatility spikes. VIX kind of spikes higher and then immediately comes down as the histogram bases out and starts moving higher again. Then again, the cross of the histogram below the zero line happens, VIX starts climbing. Again, the same thing happened here in early October, early September, early August, 3 back-to-back months. As that pattern happened, the volatility had kind of an upward move in all 3 times, except the first one in August was a very sharp move that we know was the Japanese stock market crash, but the next 2 times in early September and October, volatility did climb. And then more recently, in just about when Fed announced their hawkish move, as in they want to basically take a pause after the December rate cut. Market had at that time a volatility shot up move after the 18th of December, and we can see that around the same time we had the MACD histogram cross below. Look at what's happening now, and that's why I've shown it with a red rectangle around it. The MACD histogram has been narrowing and coming lower to the point where it's gearing up for a break below the zero line. The question here is, are we expecting maybe a near-term seasonal pullback? February sometimes gets a seasonal pullback. We got the next week or so till NVDA's earnings on the 26th. Of course, tomorrow the market is closed for the President's Day holiday, but then we got 4 trading days left in next week, and then 2 trading days the following week. And then after the 6 trading days or the 7 trading days, end of Wednesday, we have NVIDIA's earnings. So we got a total of 7 trading days left. In a span of 7 trading days, I believe that NVIDIA will be the catalyst that takes the market significantly higher, expecting very bullish earnings from NVIDIA. Why not? If you look at the tea leaves, we've seen that Amazon's CapEx spending has been significantly increased to over 100 billion of CapEx spending for 2025. Microsoft previously had talked about 80 billion of CapEx spending. We've seen Google talk about 75 billion, and we've seen Meta talk about 65 billion of CapEx spending, all in the span of 2025. Guess who's going to be the biggest beneficiary? Of course, Broadcom from the custom chips that these hyperscalers are building, but the biggest beneficiary will be NVIDIA. So you can expect blowout numbers and blowout forecasts from NVIDIA coming in their earnings release on the 26th. So that said, NVIDIA still got 7 trading days left before we get their earnings. In the 7 trading days, I wouldn't be surprised for the histogram here, dip below the zero, have a kind of a shallow pullback as we see here, and then from there begin to start climbing again. Why do we think it's going to dip and then start climbing again? We'll take a little longer term view of the summation index, which is take that same index, but now look at a weekly chart of it, which is now looking over the last 3 key years. Notice that right now, it is the histogram on the weekly chart of the summation index is just crossed above the center line, above the zero line. Whenever it crosses higher, whether you see it here, whether you see it here, or you see it here. So we're talking about in the August time frame in 2024, once it crossed above the zero line, for several weeks it stayed above the zero line before it dipped down again. Same thing here in late 2023, October 2023. It crossed, and then for several weeks it stayed before it dipped down below zero. Same thing here in the late 2022, early 23. It crossed above the zero line and stayed there for several weeks before it came down. Every histogram here is a week. So we just crossed above it. So that means you can expect, yes, we could get a near-term short, a week or 2 of pullback like we got in the July through the October timeframe. We can see that we had 5 weeks of gains, couple of weeks of pullback, another 3 weeks of gain, couple of weeks of pullback. In a stair-step fashion is how the NYSI, the New York Stock Exchange Summation Index, climbed. We can expect something similar. We could expect perhaps a couple of weeks of pullback and then a climb and a pullback. And maybe if the market breadth improves and we see broadening out of the market rally, we could even see a number closer to 1100 on the summation index is where the warning sign comes. Right now, there are a lot of bears out there expecting the S&P to break down, maybe have a 10 to 15% correction. I would be cautious in saying that. I think that could come, but perhaps before that, we get a melt up, we get a nice bullish move. Why am I bullish on the S&P 500? Look at this beautiful cup and handle that's forming. 6,099.97, closing into 6,100 was the left part of the cup. From there, pulled back to a 57.73, closed out this gap from early November. This is the election gap. It went up to 61.28, and from 61.28, it pulled back to form a handle over the last part of last couple of weeks, from late January through kind of the last week or so, till it kind of broke out last week in the last couple of days. That measured target, so from 57.73 to 61.28, you're talking about 355 points. Add 355 points to 61.28, you get a number near 64.83, which is close to 6,500. That's the target for S&P that I'm expecting over the next couple of months. So look at the indicator of the AD, which indicates accumulation. AD is climbing, which means market is adding shares of S&P 500. Overall volume indicators are indicating that there's accumulation, not distribution. If you had this kind of a pattern with AD declining, like we saw AD declining here, that would have been a bearish indicator, and that's how market pulls back. But no, we are having AD climbing higher highs, indicating a very good chance of this bullish breakout above the 61.28 number of highs of the January and climbing up to 64.83. That's where we see, and what could take it higher is a beautiful flag forming on the Magnificent Seven ETF called MAGS. It's a round hill ETF. Magnificent Seven stocks are only in it. They're all EQ weighted. So it's not that a big market cap stock, which in this case, Apple is going to drive any higher weight. They're all equal weighted in the Magnificent Seven ETF. And you can see here in the MAGS, stretching back towards summer from July onwards, this is a beautiful ascending triangle pattern. What is an ascending triangle pattern? It's defined by a key resistance level near 49.5, and higher lows is the pattern of that ascending pattern. That breakout from 38 to 49 is $11. Add 11 to 49, you're talking about close to 61, 60.8 is where that measured target on this ascending triangle is. This is also a beautiful pennant with a kind of a flag. So after this nice bullish move, you have a flag pattern. Look at RSI. It's been hovering around 50. If it had to break down, it would have broken down by the earnings that we got, which market kind of shook off and sold off some of these Magnificent Seven stocks. It did not break down the RSI. It's hovering in. This is a beautiful consolidation, a nice solid move in the December timeframe, pulling back to the 50 consolidation. This is a classic indicator of a breakout coming, a move higher. Breakout from what? Breakout from this pennant flag. And the measured target is towards 61. So from 55 to 61, 55.5 to 61, talking about a 10% move in Magnificent Seven. And we believe the driver of that will be NVDA earnings. So NVDA on the 26th, watch out, expecting bullish earnings and expecting NVIDIA to help drive momentum back in these Magnificent Seven stocks, getting us towards that 61 target. And NVIDIA could effectively retest its previous highs as it shakes off all these DeepSeek concerns and AI is back in the game, pulling markets move higher. So with that, good luck investing. Look forward to perhaps summing it up, a few days of a pullback next week, primarily looking at this bearish cross of this MACD of histogram of the New York Stock Exchange Summation Index, which is the market breadth. So for a few days, we can expect this to go below zero, which could mean a volatility move higher. So a little bit of a volatility spike expecting the next few days, and then it'll settle down. As you can see, whenever volatility spikes, comes down very quickly. I expect that volatility climb to be a buying opportunity. Any shakeout that we get in the next few days, I would buy, and then look for volatility to come down while the market breaks higher, S&P breaks higher, and look at the summation index on the weekly chart to continue climbing to higher highs as it moves the market higher. That good luck investing. Summing it up, Bitcoin would have a nice breakout above 109,000 if the S&P continues its move towards the 6,500, and Bitcoin's target, as I said, from the long-term chart is towards the 132,000, and S&P's is towards the 6,500. Good luck investing. Thank you.